To further our discussion about Wall Street's ESG moment, we're joined by Mark McDivitt, who's the COO of Context Labs and the former global head of ESG at State Street. Hey, Mark. So all of a sudden, ESG has become a very big deal in finance. It's moved from the more exotic world of alternative investments to being front and center in a lot of firms' asset allocation decisions. What do you think is driving this shift?
Yeah, no, absolutely. Thank you for having me today at CoinDesk, and thrilled to be here and thrilled to talk about this topic. And Kevin O'Leary nailed a lot of the points that I wanted to talk about today. So that's the joy of going after Kevin O'Leary. So look, investing utilizing ESG factors has really taken off over the past, say, 12 to 24 months, driven primarily by the urgency to address the climate crisis, pointing to the idea of what we can measure, we can manage. The other key driver is the notion that, look, while ESG has historically been viewed as a values-based discipline, it has finally become apparent to principally the capital markets community that these non-traditional financial risk factors, or ESG, can also help to quantify and drive value or performance of a company. Look, the overarching issue or the challenge that the industry faces, though, is the ability, the word we just been touched on this past 30 minutes, is this idea of trust in data. Data that is often viewed as biased, latent, lacks provenance, lacks veracity, and the correlation often between, say, vendor A and vendor B on the same asset is quite low. The other challenge is that there are a multiplicity of initiatives and standard-setting bodies, all with the best intentions of creating a level of confusion about what data can be trusted, which standard to be able to level set on across all stakeholders. And this is particularly relevant as countries grapple with meeting the Paris Climate Accord targets ahead of COP26 in Glasgow in the fall. So that's a long-winded introduction to say this is squarely how distributed ledger or blockchain technology and the CoinDesk community can play a key role in the ESG investing space, effectively cementing a level of transparency or trust in the data that frankly doesn't exist today. I would say, blockchain technology, go ahead.
No, I was going to say, Mark, I'm glad you touched on the Context Labs, what you're doing, because I was going to get to that in a moment. But just before we do, in your old job, when you headed up ESG investing at a major financial institution, State Street, tell us about what banks and institutions, what the checklist they were having to apply whenever you're sort of assessing the value of an investment, whether it complies or not.
Yeah, great question, Michael. And I think that you used the right word, checklist. Often ESG has been basically a box-ticking exercise where we'll put together traditional investment theses, and then we'll overlay ESG scores to quantify, in fact, that you're utilizing ESG and how you're managing risk and looking at performance and compliance purposing. So that's in a nutshell what we're looking at.
Well, and now, of course, you're at Context Labs, which is applying distributed ledger solutions to a lot of these data challenges you were talking about.
That's right.
So how are you addressing environmental data, and how are you dealing with this trust problem you spoke about?
No, it's brilliant. So blockchain technology is central to the work that we are doing at my firm, Context Labs. We've developed a software platform called Immutably that ingests all sorts of data to include company-reported filings, satellite source sensor, and third-party ESG data sets. Each step of this process, we like to say, is cryptographically proofed and ledgered, thereby rendering the data that we ingest irrefutably trusted, or something that we call asset grade. We're working closely with the oil and gas industry as an example, right? The industry, the sector that is right now in the firing lane with addressing the climate crisis and helping them to tokenize their natural gas, something we call distributed ledger as an example. Another example of how we're using blockchain technology directed principally at the E of ESG is building and will be offering to the market an asset-grade environmental attribute that companies can use to offset their carbon emissions, something we are calling an AGD coin. When one buys and retires this environmental attribute coin, one can have irrefutable confidence that the data that is verified and additionality of that project is in fact being irrefutably trusted. Many of you may have seen the announcement a few months back by the Nature Conservancy having to recall carbon offsets sold by BlackRock, JP Morgan, and Disney, because it was determined that these offsets were in fact not adding value to sequestering carbon. This is the kind of headline risk that we're trying to mitigate in using this platform, leveraging blockchain technology accordingly.